I just want to start with a lot of commentary saying this has been a long-awaited move for Zambia. Just give us an overview of what this means for that economy.
Yes, well, it isn't exactly new news to the market, although I suppose the announcement that we will find out what the policy rate is this week, it will be introduced next week, may have taken people by surprise. For many African countries, this is a transition that they're likely to go through at some point. Initially, central banks focus on money supply targeting. It's thought to be much easier to do with the instruments that they've got, and the idea is that by controlling the growth of money supply, they are able to control inflation. Now, in moving away from that, it's really a reflection of the extent to which the financial system in a country develops. But what Zambia has said is that later this week they will announce a policy rate. It's not yet clear if this is going to be the repo rate that Zambia currently has in place, and the determination of that repo rate changes. It starts to be something that might be set by a monetary policy committee. We should find out on Thursday. But by Monday next week, this will effectively be the benchmark rate. The hope is it's the rate that banks in Zambia will use for the setting of other interest rates in that economy.
Razia, do you have any idea of what, could you speak to what that rate could possibly be? I mean, from the mid-90s, we've seen Zambia's inflation, come down steadily. In January this year already, it was 6.4, February 6%, and so we saw a drop there already. Just looking at those numbers, would you be able to speak to what that benchmark rate could be?
Well, we don't expect that it's necessarily going to be very far off from where we see the repo rate currently. Now, the way that repo rate, that is the rate at which banks in Zambia can borrow overnight funds from the central bank, the way that currently operates is that it's an average of the interbank rate in Zambia plus an additional 200 basis points. So in terms of policy setting, clearly this is something that becomes more important going forward as we start to get more of an idea of the policy intentions of the Zambian authorities. Inflation, as you mentioned, in Zambia is the lowest that we've seen for some decades, but at the same time there are factors that are changing that might raise the inflationary risks further out. Zambia has benefited from very good food harvests. The more recent evidence is that maybe the maize planting hasn't been as good as it might have been last year or the year before. The currency has been under a little bit more pressure recently, and of course oil prices are strong. So we wouldn't speculate too much on exactly where this policy rate is going to be. For the moment, we don't even know what the determination of this policy rate is going to be. If it is indeed the repo rate, we do not expect it to be too far away from where the repo rate is currently. That's the average of Zambian interbank rates plus a further 200 basis points.
Looking at that repo rate, Razia, if you look at countries like Kenya, for instance, where you've got that interest rate is just, attracting a lot of investors that are chasing after high yields. And so if you were to compare that to where Zambia's repo rate is right now, Zambia would be far less than that. But do you think that investors will be looking at that and choosing Zambia as a destination in terms of those high yields?
Eventually, there is little doubt that the formulation of a policy rate in Zambia, the fact that it gives more credibility to policy, it leads to more transparency, greater understanding in the market of the intentions of policymakers. This is something that investors are likely to welcome. For the moment, though, Zambian inflation is lower than we've seen it for some time. Yields in Zambia are probably not as attractive as they might be in other frontier markets, places like Kenya, places like Nigeria, where monetary policy has been tightened very aggressively until recently, and that has led to very favorable nominal and in some instances real yields in markets with very liquid secondary markets. Now that doesn't necessarily apply in Zambia just yet, so we see this move towards the establishment of a policy rate as a positive, something that will draw greater investor interest over time. But given Zambian fundamentals, don't necessarily expect interest rates to be set so high right now that investors are going to start looking at Zambia in a big way. For the moment, the more attractive yield opportunities exist elsewhere in Africa.
Razia, what are the problems that you foresee with this?
A big issue for a lot of African central banks is how to make a policy rate meaningful. It's all very well introducing a policy rate, and in some countries, South Africa for example, the repo rate is the policy rate. There is a fixed spread in terms of the repo rate and banks' prime rates in what is an incredibly well-developed financial system. The problems that a lot of African central banks have in frontier markets especially is that there may not be a robust relationship between the policy rate and that being able to influence the setting of other interest rates in the economy, in particular bank loan rates. Now, a large number of factors go into the determination of banks' cost of funds. It isn't just the rate at which they might be able to borrow overnight from the central bank. A lot of it has to do with the cost of being able to put up branches, how much it costs to gather liabilities, how easy it is to do business in the country. There are a whole host of factors, as well as credit risk, that will then go into the setting of loan rates. How well does the judiciary work? What is the availability of collateral? So there isn't always going to be a very robust relationship between that policy rate that policymakers might establish and the setting of interest rates more broadly in the economy. It is something of a learning process. It's something that changes over time, and we expect that that will probably be the case in Zambia as well.